You're in tune to the Paperflip Real Estate Podcast.
Home buyers, sellers, renters, and investors. Lloyd for real estate. This is the Paperflip Podcast. Today's briefing comes from an article I pulled up from Keeping Current Matters. I check in with them daily. This particular article is titled What You Really Need to Know About Down Payments. I thought it would be a good idea to cover the topic based on today's market conditions and whether a 3% down payment is realistic. So you think you need a massive six-figure number for a down payment on a house today? Well, that's probably the biggest myth in all of real estate. And I know you hear it a lot. For years, we all been told that same story. You have to save up 20% of a home's price to even think about buying. So on a $400,000 home, that's $80,000 in cash you got to come up with. And for most of us, that number is so discouraging, makes the whole dream of owning a home feels almost impossible. It feels like the finish line it just keeps get pushed further and further away. But look at it like this. What if I told you that the entire idea is just basically wrong? What if the biggest thing standing between you and your first home is just a basic misunderstanding? Truth is that 20% rule is relic. It's outdated. Today, the real secret isn't about having a giant savings account. It's about knowing which doors to open. In this video, I'm going to go through and show you the exact loan programs that let you buy a house with as little as 3% down. Yeah, that's right. Just 3%. These aren't gimmicks or temporary offers, anything like that. They're solid, powerful mortgage options that could put the keys to your home in your hands faster than you ever thought possible. So let's go ahead and shatter this 20% down payment myth. Now let's just get this out the way right now. You do not need 20% down to put on a home. It's one of the most stubborn financial myths out there, and it stops so many good qualified people from even trying. So where did this number even come from, you asking? It came from mortgage lenders. They figure that if you, as a borrower, put down 20% of their money, of your own money, into buying a house, then you are of less risk. Putting 20% down is how a buyer avoids something that is called private mortgage insurance, or PMI, which we definitely going to get into in a minute. But here's the reality today. The market has totally changed. Lenders and the government have created pathways for people who don't have a huge pile of cash just sitting around. In fact, according to the National Association of Realtors, the median down payment for a first-time home buyer is currently around 9%. Now, that's already less than half of the mythical 20%. And while 9% is way better, we can do even better than that. The game has shifted from how much can you save to what do you actually qualify for? And for millions of people, the answer is a loan with a down payment that's a tiny fraction of what they've been told. Secret is just knowing these programs, just knowing that they exist and how they work. So let's pull back the curtain on the first and maybe the most important, and that's the low down payment. So let's get off into the secret loan program that's called the Conventional 97. Tell you a bit about that. First program you got to know about is often called this Conventional 97. Now, the name itself gives away just a little bit of a secret. You can finance 97% of the home's value, which means you only need to put down 3%. This is a type of conventional loan, so it's not directly backed by the government. Instead, it follows the rules set by two of the biggest players in the mortgage world itself. That's Fannie Mae and Freddie Mac. Now, they each have their own branded versions of this 3% down, and you probably never even heard of them. Fannie Mae's program is called Home Ready, and Freddie Mac's program is called Home Possible. Both are designed specifically to help out people who have good credit and steady income but have struggled to save up a huge down payment, which can happen for a lot of people here. So, who is it for? Well, it's for the person who has a decent job and they pay their bills on time, but high rent and the cost of just living, period, have made it almost impossible to set aside $50, $60, $70,000 or more. So here are the usual requirements for a conventional 97 loan. A 3% down payment. This is the big one. On a $350,000 house, that's a down payment of just $10,500 instead of $70,000. And that money can even come as a gift from one of your family members. And here's another one that's a part of that. You're going to need a good credit score. This isn't a subprime loan, so you need a solid credit history. Generally, you need a FICO score of at least 620 to qualify for this. And it must be your primary residence. These programs are all about helping people own a home in which they're going to live in, and not necessarily designed for investors. You might need to take a home buyer education course as well. Especially if you're a first-time home buyer, these programs often require you to complete a short, usually free online course about the responsibilities of owning a home. Not really a big deal. This loan is an absolute game changer, and because it tackles the single biggest hurdle for most people that's dreaming of owning a home. It's the key that unlocks the door for responsible borrowers who just, they need a fair shot. Need something to help you out. So here's another mortgage powerhouse. It's the FHA loan. I'll tell you a bit about that. Now, the conventional 97, it's a great tool, real good, but it's not the only one that's in our toolbox here. Now, the next option is one of the most popular and well-known paths to home ownership, especially for the first-time home buyer, and that's the FHA loan. FHA stands for Federal Housing Administration, and these type of loans are insured by the government. Now, that government backing makes them less risky for lenders, so the requirements are often more flexible, especially when it comes to credit scores. The magic number for an FHA loan isn't 3%, but it's real close. It's actually 3.5% down. 3.5% down for an FHA loan. So for that same house that costs $350,000, a 3.5% down payment is just $12,250. See the difference there? So who's the perfect candidate for FHA loan? Now, it often is someone who might not quite qualify for a conventional loan. Maybe your credit score isn't perfect, or you're still building up your credit history, which is understandable. FHA loans are designed to be a little more forgiving than a conventional loan. So here's a quick look at the typical FHA loan requirements. Some of the requirements for that FHA loan: a 3.5% down payment. Now, this is possible if your credit score is 580 or higher. That's a much lower credit requirement than most conventional loans. Now, also, more forgiving on the credit score rules, which is helpful. If your credit score is between 500 and 579, you might still be able to get a FHA loan, but you'll likely need to put 10% down. That's a possibility. Next thing, once again, it must be your primary residence. So just like the conventional 97, this loan is for the home that you're going to live in. It's what you intend on living in. And also, there's another thing, another one of the requirements: the property has to meet certain standards. Since the loan is backed by the government, the house has to be appraised by an FHA approved appraiser to make sure that that home is safe, is sound, and is secure. So the lender will send out a FHA approved appraiser check out their property, make sure that house is solid, secure, and that their money is going to be secure when they give out that type of loan. The FHA loan, it is an amazing option for buyers who need a little more flexibility. That's really the whole goal here. It has helped millions of Americans become home owners, and it's completely makes it impossible for the 20% down payment. Makes it impossible to even to deal with that notion, that idea. You can actually go with a 3.5 with a FHA loan. So let's address the big question here. What is PMI? You probably heard that PMI, which is private mortgage insurance, PMI. You're probably thinking this all sounds a little too good to be true, but 3% down payment is amazing. But you still trying to figure out what's this catch here. And that catch does have a name. Once again, it's the PMI. You need to understand what this mortgage insurance business is. When you put down less than 20% on a house, then the lender is taking on more risk. And if you were to stop paying on that mortgage, they stand to lose more money. So to protect themselves, they require you to pay for an insurance policy. Now, for conventional loans, this is called private mortgage insurance, PMI. For an FHA loan, it is called mortgage insurance premium, MIP, mortgage insurance premium. It's an extra fee that gets added to your monthly mortgage payment. Now, this is where a lot of people get scared off. They see it as some kind of penalty or something, but that's really the wrong way to look at it. You should think of the mortgage insurance not as a penalty, but as a strategic tool. It's the key that lets you buy a home right now with a small down payment instead of waiting years and years to save up 20%. It lets you start building your own equity instead of just paying your landlord's mortgage. You get a chance to just basically get into your own home and start paying down on it. And the more you pay it off, the better things get. But here's the most important part. A huge difference between the two loans that we talked about. Now, the PMI on a conventional 97 loan is just temporary. This is a really big deal. Now, federal law actually requires lenders to automatically cancel your PMI once your loan balance drops below 78% of the home's original purchase price. You can also ask them to remove it once you reach 80% equity. So as you pay down your mortgage and as your home's value hopefully goes up, hopefully, not always the case, but hopefully your home value is going up, your equity is going up, that PMI payment will also disappear. You're not stuck with it forever, which is a good thing. So the MIP on an FHA loan is usually for life. Yeah. Most FHA loans taken out today, the mortgage insurance premium is paid for the entire life of the loan if you put down less than 10%. That's just the way it is. This is the main trade-off for the more relaxed credit requirements. Now, the only way to get rid of it is to eventually refinance your FHA loan into a conventional mortgage once you have enough equity in your property. So yes, there's an extra cost, but that cost is what buys you access to home ownership and lets you start building wealth for your future today, not down the road. You can start on that today. So the math, 3% down versus 20% down in the real world. That's really what we're dealing with here. Let's look at a quick real world example to see why this makes so much sense. We use a home price around $400,000, which is close to the median price in the United States today. So let's go over scenario number one, this 20% myth. Now, to buy this type of house, you need a down payment of $80,000. For the average person, saving that much cash could take a decade or more, especially while paying rent. Just imagine that. And all that time, home prices are likely to keep climbing, meaning your $80,000 target might turn into $90,000 or even $100,000 before you even get there, right? So here's the next scenario, the 3% reality. Now, using a conventional 97 loan, your down payment would be just $12,000. That's a much more reachable goal for almost anyone with a steady job. So yes, you would have PMI, but let's estimate it at around $200 a month for that PMI, private mortgage insurance. Now, which situation is better? Waiting another 7-8 years to save an extra $6,000-8,000 while you rent and home prices keep going up? I mean, does that sound better or what? Not really. Or buying that house today, locking in your price and mortgage, and starting to build up your own equity. Now, how about that? Now, for that extra $200 a month in your private mortgage insurance, you get to live in your own home. That's the goal we're trying to get at. You get to live in your own home. Every single mortgage payment you make is partly going towards your own wealth. And in a few years, as you pay down that loan and the home appreciates in value, that PMI payment will go away completely. When you look at it like that, the choice is pretty clear. Small amount cost of PMI is just the price of admission to get into the game years ahead of schedule. Get you ahead of schedule. Jump on in. Become a homeowner. And it's just knowing about things like this. So let's talk about some zero down payment options. Now, believe it or not, for some people, it gets even better than 3% down. Imagine that. It gets better than 3% down. Yes. There are two incredible loan programs that require absolutely zero down payment. Yes, you heard that correctly. There are some programs that require absolutely nothing down. You have to meet very specific criteria, but if you do, there are hands down. They are. I mean, hands down, they are the best deals in real estate. And I'm going to go over these two. You probably heard of them. For one, is the VA loan. Now, if you're a veteran, active duty service member, or an eligible surviving spouse, the VA loan is a benefit you have earned. You earned that. Requires zero down. Has no monthly mortgage insurance. See that? It requires zero down. It has no monthly mortgage insurance. There is a one-time funding fee, but it's a small price to pay for such an incredible advantage for that VA loan. Now, here's the other one, the USDA loan. The USDA loan. This loan is offered by the United States Department of Agriculture for buyers in designated rural and some suburban areas. And it also requires 0% down for eligible borrowers who meet certain income limits. Now, you might be shocked to find out how many areas just outside major cities actually qualify for a USDA loan. If you think there's even a small chance you might be eligible for either of these, you should absolutely look into them. Be talking to a mortgage lender right away. Now, look, the world of mortgages can feel kind of complicated, but the main message here in today's briefing is simple. The idea that you need to be rich to buy a home, that concept is dead. The 20% down payment is a myth that holds way too many potential homeowners back. It's pushing you back, to be honest, because it's a myth. Your dream of owning a home is so much closer than you actually think. You can almost taste it. And programs like the Conventional 97 and the FHA loans were created for people just like you. They are the secrets that unlock the door. Put the keys in the lock and turn it so you can go into your home. And that's really the whole goal, and that's what I would like to see for you. And I know you would like to see it for yourself and your family, because you deserve that. So if this video helped clear things up for you and gave you a little bit of hope, which I'm hoping so, and do me a favor and hit that subscribe button for me. I release videos just like this to cut through the confusion in real estate and give you the tools you need to build your future. So your next step isn't to keep saving for some imaginary number. You don't have to do that no more. Your next step is to talk to a good mortgage professional, a good mortgage lender, qualified loan officer. Look at your specific financial situation in just a few minutes. Tell you exactly which of these amazing programs you qualify for. And that's what you really want. You know, even if you think you're not ready to buy today, just talking with a loan officer and getting an idea of what you might qualify for or what steps you need to take to get to that goal of home ownership by just knowing it and taking those steps. And it don't matter how old you are or how young you are. It don't matter. You would like to know what your financial situation is and what steps you need to take, and they can guide you there, along with a good real estate agent, of course. The barrier to entry for home ownership, essentially, it has been lowered with this information. You just have to know exactly where you need to be entering at. So stop saving for a myth and start planning for your reality. You got control of this. I'm Lloyd for Real Estate. Thanks for watching.